One of the other companies that reported earnings is Wingstop. The wing chain came out with earnings per share that beat analyst estimates, 44 cents versus the 31-cent estimate. And overall sales at the company up about 27.5% if you look at total revenue. Cost of sales, though, also increased as bone-in chicken wing prices up 25.8%. Let's talk about chicken wings, shall we? Michael Skipworth is with us. He's the Wingstop CFO. And Michael, I want to start there with the cost of wings. Is there, we've been talking about shortages of everything lately, including semiconductors. Is there a wing shortage? Is that what's happening with prices?
Yeah, Julie, good morning. I don't know if that I would limit it necessarily to just wings, but what we're really seeing is a labor shortage, more broadly speaking, specifically when you think about poultry producers who are having trouble staffing their plants at 100%. And so you're actually seeing inflation in all parts of the bird, not just wings. And we really believe that has more than anything to do with just the pressure there is on the labor market with the amount of stimulus that's enabling people to not have to go out and work and claim these open jobs that are available to them.
So is there pressure on you guys then to raise your wages as well in order to get those people into the stores working?
Yeah, thankfully at Wingstop, we have an extremely efficient model that is able to leverage a relatively small roster. And with that small roster size, we were able to minimize the impact of any sort of labor shortage, as well as any sort of impact as it relates to wage inflation. But as there continues to be stimulus put into the economy, we would expect to see some near-term wage inflation throughout the overall labor industry.
And Michael, are you still testing thighs as one way to diversify that cost of goods sold line and offset some of this inflation?
Yeah, we're definitely exploring options on ways to use more of that bird and about, if you will, kind of balance out our overall commodity basket. But one thing we've been able to do is really lean into our partnerships we have with our suppliers who, being a buyer of wings throughout the entire year, we've actually been able to enter into a pricing mechanism with our largest suppliers who have enabled us to avoid what on the spot market for wings was actually inflation during the first quarter of over 50%. And we were able to mitigate the impact of that inflation and limit it to about 25% on our P&Ls, really leaning into the partnerships we have with our strategic suppliers.
And then, Michael, thinking about the delivery channel, obviously kind of the only way that many people were engaging with any restaurant for some time last year. Behavior, has it normalized a little bit? And how are you thinking about that part of the business as we look towards, what seems to be mostly a normal economy, let's say this time next year?
Yeah, I think Wingstop as a brand had a really, really strong off-premise business before the pandemic, enjoying over 80% of our sales off-premise. And we were well positioned as the pandemic hit just over a year ago, having made strategic investments in technology. And it's those investments as well as our partnership with DoorDash that allowed our business to perform quite well. And year one for us as a brand with delivery as a channel was 2020, where we saw that channel mix grow to 25% of total sales. And we've been able to sustain that level of delivery mix through Q1, as well as a broader digital business that's over 60% of sales for the first quarter. That level of digital mix is something we've sustained since the pandemic hit just over a year ago, which I think really demonstrates the stickiness we have with those digital guests. And that's really an area that we're leaning in, and one of those levers, if you will, that we're pulling as we learn to engage more on a one-to-one direct marketing basis with those digital guests. And we're bringing them in sooner after their first visit with Wingstop. And then from there, really working to engage with them and drive their frequency, which I think really helped support and drive a lot of that really strong same-store sales growth that we recorded for the first quarter, a 20.7% same-store sales growth. And when you look at it on a two-year basis, over 30% same-store sales growth on a stacked two-year comp basis.
Michael, that's a big gain there in the first quarter. Same-store sales domestic up 20.7%. Are you sustaining that gain so far in the second quarter?
Yeah, one of the things we commented on related to earnings on our earnings call yesterday was the fact that through the month of April, the first 4 weeks of Q2, we have seen positive same-store sales growth. And it's important to note that that positive same-store sales growth that we mentioned is coming on top of one of the strongest months we've ever had as a brand in 2020, where we posted same-store sales growth of 33% in April of 2020. So you can see that positive same-store sales growth that we're seeing as we started or entered Q2 is even showing an acceleration in that 2-year comp.
Michael, thanks for being here to walk us through all these numbers. Michael Skipworth is the CFO of Wingstop. Appreciate it.